Big tech obviously has had a good run in 2023. The S&P 500 technology select sector Spider Fund is up almost 50% this year. And from the Magnificent Seven, chipmaker NVIDIA is the last of the mega caps to report. It's out tomorrow after the market closed. Joining us now is Paul Meeks, veteran tech investor and professor at the Baker School of Business at the Citadel. And you've been, at least, I wouldn't say that you've been, that you haven't been bullish, Paul, but you've certainly been selective, and it hasn't been across the board that you were recommending all these different stocks. Where are you right now in terms of looking at the landscape?
So as far as the landscape goes, as I peer into next year, I'm a believer, or at least an increasing believer, in the soft landing. And if that's the case, then I imagine that tech sector will outperform again in calendar 24. So I'm incrementally bullish, not necessarily because of more enthusiasm about AI or actually anything that's fundamental, but it's all about rates with these aggressive growth stocks. And if we do start to cut rates, probably not early in 24, but maybe to the middle to the second half of the year, that should be a boon for these stocks.
This has been the year of the rate increases, Paul. And we just said that tech fund is up 50%. So why would, with rates going up, it's outperformed everything. Why would it outperform with rates coming down? Does that get a double whammy?
Well, if you think about it, we've had a microcosm this year, right? Tech stocks at the beginning of the year ramped up because, remember, the consensus back in January last was that we'd have a recession in this country and the Fed would lower rates before December 31. And that was the play through the first half of the year. Tech and aggressive growth skyrocketed. And then when we got the feeling in about the July timeframe that we're going to have the higher for longer, we actually did have a significant tech correction. But the last couple of weeks with a little bit incrementally positive news on inflation, now we're back in the good graces. So we did take quite a pounding for a while when people thought rates were going to be higher for longer. And that was just a couple of weeks ago.
So you still waiting, or now is the time to buy? And what would you buy and what would you avoid in the usual suspects that we talk about?
Yeah. So I actually, as I said, I believe in the soft landing scenario. So I would be in tech. And now that we've been through the quarterly conference calls for almost all the companies, except for NVIDIA tomorrow night, I feel pretty good about it. So I would own tech. And I know it sounds like a boring thesis, but in this sector, and I've been doing this for a long time, the strong typically get stronger. And particularly if AI is a driver, they have the resources to invest, others don't. And so I continue to be interested in the larger cap, the mega cap stocks, X something like Tesla, which I don't think really belongs in my group. But yes, I would buy some. I think I would probably wait on NVIDIA until after tomorrow's call, because NVIDIA will have good numbers. They will upside. But what happened is the last time they reported their results, they upsided, and the stock still did take a little bit of a fall. And so I don't know if we're going to have good NVIDIA or bad NVIDIA. I feel very comfortable with the fundamentals, just not what the market will expect the next day, because it's not about what they do. It's about what they do relative to expectations.